A $1 trillion industry that no one is talking about, and an opportunity on the brink of a major boom. That's what we're uncovering tonight. We break it all down and, as always, give you our carefully selected stocks that are already showing signs that the next boom is right around the corner. I'm Philip Tortevsky, joined by senior analysts Janine Cox and Pedro Banales, and we are Wealth Within. Good evening.
Good evening.
It's an exciting show tonight, isn't it?
I was just going to say that. Get ready for the periodic table.
Master reveal. All right. Well, welcome, Pedro.
G'day everyone, and $1 trillion industry. This sounds exciting for sure. I'm sure everybody will definitely benefit from watching today's show.
Yeah, it's going to be a good one. So let's dive right in. Now, what's this $1 trillion industry no one's talking about? Janine, please uncover it for us.
The $1 trillion industry is semiconductors, but the hidden commodity inside that story is helium. TSMC, the world's largest chip maker, recently lifted its forecast for the global semiconductor market to more than $1.5 trillion by 2030 as AI demand explodes. What most investors aren't talking about is that advanced semiconductor manufacturing relies heavily on helium for cooling, leak detection, and ultra-clean fabrication processes. Helium is critical because there are very few substitutes at purity levels required for advanced AI chip production. At the same time, helium demand is forecast to rise sharply over the next decade. Reuters reported that ID Tech X expects global helium demand to almost double by 2035, driven largely by semiconductor manufacturing and AI infrastructure growth. That matters because helium supply is still highly concentrated geographically. Qatar alone accounts for roughly 30% of global high-purity helium supply, and recent Middle East disruptions have already raised concerns about semiconductor and AI supply chains. So the investment thesis is pretty simple. If AI keeps driving semiconductor demand higher, the world needs more chips. More chips means more demand for helium, and that's where ASX helium stocks could become really interesting.
Yeah, it's very, very interesting. We're going to dive into some amazing stocks in a second, but I wanted to touch on one more point before we get onto our stocks. Now, recently we saw the US delegation head to China, very publicised. Largely, it was made up of tech moguls. So what do you make of all of this in light of that helium opportunity we've just mentioned? Pedro, I want to get your thoughts here, mate. Are they already on the ball with what's going on?
Oh, absolutely. And, you know, like you said, Australia is going to be a major beneficiary of this helium story. And what came out of that meeting was what America and notably NVIDIA expecting to sell more semiconductors into China. And at first it seemed like that deal was going to go through, but then once they were on the plane, the Americans that is, they got notice that the Chinese government actually banned NVIDIA selling chips into those high-level chips anyway, into China because they're making their own semiconductors. So that's a huge scale that they're going to need to produce. And of course, helium is accounts for 20 to 30% of that demand. So that semiconductor is is going to be a major beneficiary when it comes to that helium story.
All right, fantastic. Let's get into our stocks now, because this is where I guess the real opportunity is. Janine, what have you got?
Very interesting, Phil. Well, Noble Helium is the first one on the list. Now, if you look at the chart there, you can see that it's come off a long-term decline, and we've seen a bottoming pattern unfolding, and a test of that low is actually underway right now. So this is a really interesting time to be watching this stock right now. I'm going to expand that up a bit so you can see now it's had actually a rise off that low, one test of the low, another test. These are classic little formations that you like to see when a stock is actually confirming that a low is in. Last month it actually looked like it was going to take off south, but so far this month it's been quite steady, which is quite good, and showing that the support under these lows here is actually holding, which is really fantastic to see. And now we just need to see a strong push to the upside, and we could have a nice little opportunity there in this nice helium stock.
And I want to get your thoughts as well on this stock, Pedro, because I can see there, obviously, for any of these markets to really get going, like we've seen with lithium recently and some of the others, we do need to see that participation from the volume side of things. And when you look at this one here, it's getting a bit interesting in terms of what's been happening over the last month or so.
Oh, you got to love that volume coming in at the end there. And this reminds me of some of the early rare earth plays that we've seen. And now rare earths, everybody can say them, quite confidently that they're in demand. Everybody knows what rare earths are. Right now, helium is that kind of one that's flying under the radar. You're going to see a lot more people mention that and that undersupply story. But this is where the opportunities are made. So you want to really get in early. And now we can see that there are some major players starting to get into this, yet it's not managing to drive up price too much. But this is that bottleneck, that compression that we're looking at, here on the chart. That, oh boy, I tell you, if this breaks to the upside, it's going to have a huge momentum as it does. And this looks very similar to some of the stocks that we've outlined in the past here on the show, and most notably, stocks like Drone Shield and EOS, where they were compressing quite tightly, and then they just shot up, over 10 times the value.
Yeah, definitely one to watch. All right, let's get to our next stock because we've got a lot on this list.
Yeah, there's a big difference between 10% and 10 times its value, isn't there?
There's a lot.
I'm glad that you said 10 times its value. Let's go and have a look at the next one. This is D3 Energy, D3E. Now you can see there that this is actually not the trend line, but it's showing the angle of the trend. And you can see these lows are getting higher, which we like to see. Currently off that low that I'll just give you a date there in December 2025. It's almost like it's stepping up, and at the same time we're seeing this consolidation unfolding, but it's holding on. We really need to see a further rise. If we go to the weekly chart, we can see it a little bit better, but it's still in a bit of danger zone. So if it takes out that low there in May, I'd say just leave it. But if we see a rise above this high here at around, I think it's 45 cents, it could move up to challenge that all-time highs. That is the initial move that it's likely to make. And then it's got huge potential over and above that once it gets into blue sky. But that's looking really interesting, Phil.
Yeah. Does it give you confidence? I mean, a lot of stocks, they IPO, they have their fall, but then this one has very quickly picked up the slack and starting to base out at those new price levels. Does that give you more confidence that this one's really, long term, there's something more in it, or?
Yeah. Look, I mean, just looking at the chart, we can see that since that week that it launched onto the market, it's gone up at least 135% to that initial high there, which, for these smaller stocks is quite typical. We haven't seen this one go into the thousands of percent from the launch, but that's still possible if it gets going.
Yeah.
It could easily double if it goes through that all-time high and heads up to towards the dollar mark.
Yeah, awesome. All right, now on that trend lines, all the stuff we show on this show, how to find those right niche markets like we're showing today and really get stocks and be able to trade them profitably before the market catches on. Check this book out, How to Beat the Managed Funds by 20%. It's free. You just have to pay the shipping. It's from Dale Gillham. But as always, if you do really want to take this professional, we have a government accredited diploma of share trading and investment. You will not find another one like it. Go and check the testimonials and really, supercharge your investment skills for 2026 and beyond. You're not going to regret it. But let's move on to our next stock, Pedro. GHY, I believe, another helium play.
Yeah, another very interesting one, right up my alley. It's one of a smaller cap ones. It's a developer, actually, an explorer based out in South Australia. They develop, hydrogen and natural, helium with gases. So right now, you can see not like that previous one, it is trading below the IPO price at around that 30%. It did shoot up after the IPO, 267%, but now it's trading below it. So it seems like it naturally now wants to move back to around that range of around 60 cents there where the IPO price was. On the weekly chart, this is where it's showing most of the action. And we can see volume coming into it again, and it's gapped up this week. So there's something happening. This could be actually the start of a new uptrend. Now, if I was to put a support level, I'll definitely put one around this area here. It would be around that 30 cent level. And interesting that 60 cent level that I outlined earlier is around that double of that. So that'll be the range that I'd be looking at. There's multiple resistance levels around that 60 cents. This obviously, you can fine tune this a little bit more, but basically that's where we're at. And you could put another resistance level here as well at around that 40 cents. So you could wait until it breaks above that 40 cents, for more confirmation. But this one is looking quite nice. And I actually would wait for that 40 cents because it's a pretty important resistance level where it found support in the past. But this one could very well break that overall down momentum as we've seen here. If you skip that volatility up there, that momentum really seems to be around that angle here. And if it's breaking above that, then this one could actually be looking very nice.
Yeah, I mean, 3 stocks with 3 opportunities there, big term opportunities, but stick around because we've got some more amazing helium stocks coming up very shortly. Now time for our trending topic this week. Janine, what have you got?
Yes, markets are divided. Are we seeing signs of a stock market crash emerging? On the one hand, 10-year government bond yields have been rising as the threat of higher inflation looms. You can see that the yield curves well and truly turned a corner after COVID. US and Australian bonds are leading the charge, and Australian bonds have risen above 5% recently. US yields are recently above 4.5% and appear poised to push higher. And the US government sold 30-year bonds at the highest rate since 2007. Now, if inflation were to rebound again, yields will rise further, making stocks more expensive. So this can explain why some stocks with great forecasts fall. Global financial institutions want to see that the RBA will do what's necessary to rein in inflation back towards the target of 2.5%, but they aren't buying the message that Australian inflation is under control, and global energy shocks have created a huge headwind for interest rates which could stay higher for longer, putting pressure on corporate profits. My message is focus on stocks with good cash flows. Let's take a look at the charts to see where we're headed. All right, now we know that when inflation starts to run away, which it did prior to the GFC, we've also seen the same sort of thing happen in the 80s, that markets then go into a major correction, but not before we see a massive rise. Now, how do we compare where we are right now and the way the market's been unfolding to what's unfolded in the past? It looks nothing like it. That's what I can say from my experience. We're seeing more sort of choppiness and consolidation like we saw through these periods here, similar to what we saw after the recovery in the 70s, then an acceleration leading into the peak of the 80s. Now, have people who are sticking their fingers into things like we saw Trump with the tariffs, we see governments with policies, we see reserve banks making decisions that could perhaps go over and above what they need to do. And then they cause this big overreaction in markets and we get a huge acceleration. We get tax cuts and that also fuels the whole cycle. But, if we look at how far our market grew since that high in 87 to the high of the GFC, we can see that there was a 200% rise over that time. Now, a lot of the time, the market actually spent going sideways, which might surprise some. And what has it done more recently? We've seen a lot of sideways, 3 or 4 years in these sideways moves that occurred and repeated again more recently prior to the Trump announcement, where the market fell 17.7% or 17.5%. Now, we haven't really recovered much since that, and we haven't had the run-up and that sort of accelerating inflation. Now, has the government really put the kibosh on the potential for the market to make that boom? Well, it remains to be seen. We don't know, but normally the commodities still drive the market higher. And so, we've been expecting the market to at least head up to somewhere between 10,000, 11,000, and, the stretch targets go even higher than that for what the market could do. It all depends on what's going to happen with interest rates and the government policies of the time. But if we look at what our market's done since the GFC, we're only up about 30%. Now that to me is no boom. And, we're supposed to be in the throes of a commodities boom. And Australia is king when it comes to commodities when you look on the global stage. So I just think that we're still getting warmed up.
Yeah. I mean, when you look at it like that, it's really evident, right? nowhere near that euphoric type move that you see.
Yeah, exactly.
Which is great information to keep in mind. If you have been worried about whether or not we are near the end, that's some great insight to take in. But if you want the skills to analyse stocks, just like you have seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some of those more helium stocks you've got there, Janine. What's next?
Now, this is an interesting one. This one is going to really knock your socks off. Have a look at the rise that we've seen recently. Now, this is really illustrating what Phil and Pedro have said many times on the show before, is to look for these moves off these lows and wait and really be patient about what's going on. Then we see another test of the low, and then the best part of the run happens. Could it repeat that? I think this stock could be just getting started. It's just cracked that dollar mark. I'd expect to see some consolidation happening, and then eventually once it gets back through $1, it could, go up to $1.50 even.
Yeah.
I would say, just looking at it.
I want to get your thoughts in a second on this stock, Pedro, as well, because when you're looking at this, you really, the question to me that springs out is, where do you sit in all of this space? I mean, because if are you an investor, are you a trader?
It's a trading market, this one. It's not an investing market right now, especially given where we are. This is not about long term, it's more short to medium term.
Yeah, awesome. And when you look at that chart as well, I mean, does an investor have the same hat as a trader and say, okay, maybe now's not the ideal opportunity, or do they say, well, I'm going to hold it for a bit longer anyway, so I'll ride them?
I don't understand why investors would even put their feet in this water. You know, if they think they want to go down this path, they're really traders with an investor's hat on in disguise. That's the way I look at it. That just maybe haven't got around to getting the right knowledge yet.
Yeah, and be mindful of that risk, obviously, in these markets. But Pedro, your thoughts on this one, OMA, mate? It's a little different to the others. It's well and truly taken off way more than them. Still an opportunity?
Well, this one, I suspect that it's taken off because of the oil scenario and what's happening in the Middle East, because this is an oil and gas explorer. They're based in Queensland and they're in the Taroom Basin. So you've got double exposure. You've got exposure to the oil and the gas play. And this is a theme with a lot of these. They are going to be in the gas space because helium is obviously tied into that whole story. So you have to also find out what is behind these moves and whether, helium is really something that's going to be driving this up. But in terms of investing in it or trading it, I'm 100% with Janine. You have to get on the back of this momentum. You wouldn't just buy and hold this one. You want to be riding those waves. And right now, this could be presenting an opportunity because we can see as a trader, you want to wait for the opportune time before it takes off. And then it has these pullbacks, then it takes off. Then it had a pretty decent pullback in 2025, takes off. So it's got these ebbs and flows that is perfect for trading. Think of it like waves in the water. You want to be surfing at the back of those. So right now it's trending down. You do have to make sure that you know when it actually does find a trough, because not everybody would be able to pick it. You could think that it's part of this move here, that you're just buying the dip, but that dip could actually cost you, because that could actually be the start of the new downtrend. So I just be careful with that. It does look quite vertical at the moment.
Yeah, fantastic. All right, let's get to the next one, EXR.
Yeah, well, look, I mean, EXR, that's actually another really interesting one. Elixir Energy. Now, I mean, this stock has gone from 51 cents all the way down to, the lows, 1.8 cents. Now, that's going to take your hat off. But look at the lows here. You've got 3 lows, all roughly around the same level. That's quite interesting to me to see how the stocks come back to those levels. People think that when these runs happen that, that they'll never come back to those lows, but they often do, and especially low price stocks like these that are trading below $1. So if we're looking at the recent rise, it has changed personality. It doesn't even look like what it was back here. It looks much better, in my view, than what we've seen ever on this stock. Now we just need to see a pullback unfolding for it to find support, and just looking at where it might actually find support. It's got some strong levels down here around those lows and the high that occurred not long after it first launched in 2019, it seems. So, but then above that is where it's grappling right now. I mean, if it finds support here, that's super bullish if it doesn't go much lower. If it goes a little bit lower, I'd still say it's got room to move, but a low or a consolidation at these levels and then a further rise, that's just looking incredibly nice.
Yeah, Pedro, your thoughts on this one?
Yeah, this one's really good. And if you want a bit of exposure to Mongolia, this is the perfect one, because they do have, some exploration over in Mongolia, but it is Australian as well. They've got exploration sites here. So there you go, fun little fact. What I like about this is that it does look quite cyclical, and it touched on that exact same low that Janine was talking about to a T. So this is a very technical stock to trade. Now, what I wanted to do is go to the weekly chart and really highlight what's happening with volume, because as we see price rising, and I'll outline there, price rising, we're also seeing volume rising, and that is a perfect indicator of a sustained uptrend and also more liquidity being injected into the market. And now, interestingly enough, I did a full online forum for our diploma students on volume recently. So if there's any student listening, check that out, because I went and did a deep dive onto the exact bars and looking at volume and whether volume is indicating that there's a downtrend coming or there's an uptrend. So there's a lot more involved, and the relationship between bars and volume is so important, and it's something that a lot of traders, I think, kind of null over. They want to focus on indicators like RSIs and all these, fancy things, but just look at the simple volume and price relationship. That's going to tell you a lot. So right now, they're both trending up. The stock is trending down on the weekly, but if it does conform to that overarching trend, then we could expect that to continue upwards.
Fantastic. Now, I want to leave the last one for this segment to you, Pedro, because it is one of the more specky stocks. And the reality is, if you are looking to play this space, especially helium, there aren't that many good ASX listed stocks that are have the helium exposure. So this one here is a little more speculative. I will start it off by saying that. Pedro, have a look at this one, please. Give us your analysis. Just be, and following on from, I guess, that topic or the conversation of volume, this one starts to become very interesting, albeit still very early and speculative.
Yeah, it is very speculative. So I'm glad that you kept it away from Janine, and you don't want her falling off her chair on this one, because
it looks like it's doing the death roll to me.
It's flatlined when you look at it on the monthly, but you have to really pinpoint it and fine tune these smaller specky ones, because it could actually be a whole different company than what it was back here in 2013, trading at $7, whereas now it's trading at 0.006 cents. Did I get that many zeros right? I don't know. There's 2 zeros in there, so it's pretty low cap, but there is volume starting to increase into it. So this one could be something that you just put it on your watch list. You could maybe make it as a bit of an indicator as to whether there's interest in this sector as a whole. I believe this company is based in North America as well. But also, what happens in a market and in a sector is usually the bigger cap stocks start to move first, and then you start to see the trickle into the smaller ones. And this one could be one of the last ones that start to get that interest. What you want to look out for these, a bit of a tip, is a change of bar, how they look like. So notice that already the bars are looking quite different here as they were back here. Here it looks like, some alien language from, Predator or something like that. Whereas this is actually looking now like a more like a charty feel, with the opens and closes in different places and not all around the same section. We've got volume coming in. So I'll just wait for this one to mature a little bit, but this one actually could be one that, you wouldn't bet your whole life savings on it, but you could have a bit of a crack, with some lower amounts, if you wanted to get involved.
Yeah, it is definitely one for the more specky. But before we move on, let's pick the favourites of the bunch, Janine. It's not going to be the last one, but which one is it?
That's an interesting question, isn't it? I'd have to say, if I was to pick, I have to look at D3 Energy because of the way that it's consolidated, but it has to be above that level I mentioned. And Elixir Energy is actually really nice, the setup that it's had, but I'd want that pullback to finish and then wait for that move up.
Awesome.
Through 20 cents, yeah.
All right. Pedro?
All right, I'll just choose one, Janine. I won't hog all of them. So I'll go with NHE. NHE for me is looking quite interesting. I love that pattern that's unfolding and the volume that's coming into it. I think that this one's looking quite positive.
Fantastic. All right, now moving on shortly, we're going to get into our hot stock tip, which is an absolute ripper. But first, let's answer your questions. Nick writes, FMG is testing key levels if the market is due to be bullish. For the next year, do you expect the all-time high to be broken? And what price projection do you see FMG running to? Now, he did, what's not on that email is that he did address this to you, Janine, so I'll ask you this question. Yeah, I think you guys covered FMG yesterday, didn't you?
Yes, we did in the market report.
Yeah,
exactly.
Monday show. Yeah. So if you want to know more about FMG, go check out yesterday's video on YouTube, which was covering some major stocks, but what are your thoughts?
Definitely an interesting one, FMG. So good that you've picked this. It hasn't run yet like BHP and Rio. Still expecting that there's at least a target up around this $26 mark, possibly a little bit higher. And looking at what's interesting to me most of all is the fact that it broke that support level. Now, in normal circumstances, if the stock comes back and it breaks it like that, I'd like to see the strength or the close down, but it actually closed up high and then bounced off that level, which is really nice. We need to see a little bit more of a consolidation. Last week was up, but this week the market shied away from it again. So that's showing the strength of this level, I think. So I think you'd be wise to just be patient and wait, depending on what your rules were. I mean, there are some rules there that could have got you in earlier on that one. Could have got you in somewhere down here around $21 even potentially. So there's some potential upside here around 25, 25.50 and then to the all-time high. It could go up and not just hit that level, but it could go up and challenge that all-time high as part of the current rise, which, I'd be expecting to see that at the moment, given the way that it's holding up. That line is really nice underneath it, and provided that continues to hold, I think it'll be good for FMG.
Yeah, so you're saying potentially it is going to go to a new all-time high?
Potentially, yeah.
Yeah, there were two parts of his questions. It was, will it take the all-time high? Mm-hmm. And then if it goes through the all-time high, what projection could you see above that?
Yeah.
Any thoughts on that?
I mean, if it does, so there are two scenarios. One, because there are two patterns that could unfold with FMG, and that's always going to be the situation with any stock. There could be two or three scenarios. You've just got to pick what's most probable. And at the moment, the most probable thing is that it breaks this level and goes up to challenge that all-time high. The next step is if it does take out that all-time high, and I'm going to show you something that can actually be really useful when looking at a stock, because it sort of puts it in perspective if you're actually viewing the whole long-term picture of it. And that is to just dwarf the chart right down. It really makes you think differently about the way that the stock is unfolding. So given that once this level gets broken and it takes that out, this is why I'm saying that it's then got the potential to go to new highs. And to me, it's a significant potential for it from there. It could even head towards $40 from that point. But it could, one thing you've got to bear in mind is when stocks go through their highs, it could just rise through this point here, and I should have used that other tool, but it could then just pull back, test support before it then makes its move to the $40 level. So just be mindful of that. Yeah,
and I mean, just keeping to this, because it's an interesting question. When you're looking at the caliber of stock too, I mean, does that play into it as well? Because when you look at something like BHP, Rio, FMG, throughout history, the company's managed to make a new all-time high over time. And you would expect if it can continue
Well, how long has it been trading sideways for? It's been since 2020. So, this is 6 years of a sideways move. Now, it actually traded sideways long-term through after the GFC, but there was a very different scenario back then from 2009 through to 2014. So times have changed. So I don't think that's necessarily going to repeat the same extended sideways consolidation that we're seeing. I think at some point it's got to make that break, and then it's just a question of not how high it's going to go. It's just a question of how much you're willing to risk.
Yeah.
Because you could get taken out on that rise with your stop loss, but then you might have another opportunity to get back in depending on how it unfolds.
But I mean, just to get back to that question of if this was a stock outside the 300 or outside the 500, the anticipation that it's going to make a new all-time high, for me anyway, would be a lot less than looking at a stock in the top 20.
Yeah, because generally funds have to take a position in these stocks, and so that's going to push it higher.
You know what I mean? And so I think, think about that as well, the kind of stock you're looking at to help you in identifying, does this have a chance of getting through to a new all-time high or not, based on what kind of flows are coming through, helps. But I wanted to ask you, Pedro, on this question as well, because it's interesting what, I guess, importance you play on or you put on as an investor, projecting out and saying things like it's going to go to a new all-time high, or I see it breaking through another 200%, and be a little bit of a devil's advocate, because sometimes trying to be too smart with the market can work against you, and just looking in front of you and saying, is there an opportunity here for me to make money today? Where do you put the importance on these kinds of projections when you're talking about stocks like FMG?
I think that's a very important note, because if you set a psychological level and you say, look, I think it's going to go to this, let's just say $30, and then it's going to find resistance. Once it does get to that level, and just say it does to slow down, your mind is going to then justify an exit. And it's interesting because yesterday on the show, I noticed that one of the comments was that somebody recently sold out of FMG. And when I'm looking at the chart, I'm thinking, well, there's no reason to sell out of this stock at the moment. It's actually trending up, and it's in a nice, beautiful uptrend here as it bounced off that $13. So I really saw no reason, apart from maybe the fact that it has hit that resistance at around that $23. But that's what happens when you put these price targets. It becomes a psychological level, and it may make you do things or sell out earlier prematurely than when you really should. So really, I think that the best way to do this is to put a trailing stop loss, and what Janine was talking about earlier, just a nice little line underneath that should do it. And that should be a nice objective level that you can work with. You can have your levels, and by the way, my level would be that it does reach that $40 over the long term, as it does seem to have those $13 increments for FMG. So I do believe it is going to head there in the long term.
Yeah, and if it takes out that low in May, then just leave it. This is this low underneath at around that $19 mark. Yeah. Just let it go.
Look at both sides. All right, great advice. Now, Aninja Zemal is next, seeking your insights on Investigator Silver. I'm seeing support around 0.043 and 0.059 cents. Do you see a retest for the third time of the 0.056 support? Also noting an unresolved gap between 10 and 11 cents from February to March, following the 20% drop post Paris, South Australia project studies. All right, Janine, I see you shaking your head.
Yeah, I don't know what to say. I mean, I think we're sort of trying to get down to the micro with this, rather than panning back and looking at what's going on in the big picture, because, I agree that there's a support level there, but it's just have a look at the history of this stock first, just to examine what it's been through to answer some of these questions. So this stock has spent a lot of its time going through, this level for a long time, and it wants to come back down there. So there's a real probability, the way that I'm looking at this chart right now, for this to go lower than the levels that this person's just mentioned. So with a stock this low in terms of price and the increase in volatility that these sort of stocks see, it's no point just drawing a line under a bar and saying, I see a strong support level there. You've got to do a lot more work to work out where that strongest level is. And I'm not saying that it's exactly where I've got my black line. I'd have to look in more detail, but that's where you need some really good knowledge on price and pattern and time to work out when the low's coming in, because the low might not be due until September. That's what we don't know yet until we do the full analysis on it. So I would say that if you're really interested in trading these sort of stocks, you will be fascinated by how price pattern and time works. And some of our students, they complete the diploma, they go on and do the advanced course so that they've got a lot more, understanding of that bigger picture and the way that things unfold.
Yeah, you said something very interesting about, potentially, I don't know whether it's a male or female, but zooming into looking at real microstructure type price levels. And I think, just over history and speaking with students as you do, the consensus is always when you look at the specky end of the market, I'm trying to keep things as tight or as quick as possible.
Yeah, which is the opposite. You've got to do it. Yeah.
So you're saying maybe a bit of advice, go big picture with this and zoom out on the bigger timeframes, give the stock the room to move?
And they're not doing that. Like even some people I was speaking to recently are telling me that, when they're trading daily charts to try to get income, it's very much micro that they've been focused on, which is just leading them the wrong way. So that when it's all right when things are really bullish, but when the market changes, they will continue to stumble over and over again more times than they would if they panned out and had a good look.
Yeah, crazy. And, I think after all these years, the thing that gets missed a lot is that good trends unfold over time. You need time. The more you eliminate time, the worse it is for you to get good growth. So allow that time, use those timeframes to give you the opportunity to catch a run, because it's not going to happen in 10 minutes or a day, the good ones anyway. But
exactly.
And you're not going to be able to catch it in a minute or a day if you're really trading well. But let's move on to our next one, which is Frank, and he writes, US Treasury yields are now higher than they were before the GFC. Does that increase the likelihood of a broader stock market crash or a market's better position this time around? Yeah, look, we covered a little bit about this. I'll get Pedro's thoughts on it, mate. There is this talk for me, and maybe, go into this a little in that, now they're talking about expecting higher for longer, rates higher for longer, right? That's going to be the new norm, potentially. But what are your thoughts on what, obviously Janine mentioned earlier in the trending topic and this question here, should someone be so concerned about the yield right now in terms of their strategy and whether or not a crash comes, or, you're not bound by having to force billions of dollars in and out of the market. Do you just follow what the market's doing?
Yeah, well, it seems like what they're doing is that they're letting the market find its natural equilibrium now in terms of the bond rate. And we've seen also Japan, they've shot up at 4%. It's the highest that it's ever been, in 10, 20 years. They've traditionally had 0% interest on their bonds. And that was because the RBA, not the RBA, well, it was their Reserve Bank in their own country were artificially leaving those rates low by buying those bonds. But now they've actually come up, and of course it's made money more expensive. And that's really the thing that you need to get out of this. Is just that borrowing money has just become a little bit more expensive. So what type of stocks is that going to affect? Well, that's going to be those heavily reliant on debt. Think of the tech stocks. The REITs, all of these, property type stocks, any stocks that are trying to innovate and trying to build out their infrastructure, they're all going to be relying on debt. So notably that the tech stocks are the ones that typically suffer when you have those rate increases. However, AI spending has gone off the roof. It's the most, even more than spending on railroads and things like that. I saw a chart the other day that there's been more AI spending even more than the railroads in the US. So that's not going to stop anytime soon because we are in an AI race. So there are multiple factors conflicting with each other that aren't exactly going to make it as simple as bonds are rising, so the stock market is going to go down. There are going to be other factors to think about there.
Janine, you wanted to mention?
I think that's one of the most important points that anyone could make, what you just said, Pedro, about the AI and the tech spend that's going on, because while US stocks are still producing, and the S&P 500 had a really good overall earnings season, while that's still in play, while the AI and the tech's still the story, I don't think that there's a concern, but we've just got to watch that narrative really closely, because once that changes, then we know that things are different and the market's going to become a lot tougher. They'll start selling those sort of stocks down, and that will be the sort of precursor to watch. But what really is interesting is watching stocks that have good cash flows still, not the ones that have got cash flows into the future that projected. They're the ones that are at risk. And the REITs always get beaten up, but you know what? There's a lot of them that historically have had low debt levels, and you'd have to go through them individually, that produce good cash flows, that, you know, they might have about 30% debt to equity, which the market accepts. Once they start getting up above 40, 50, the market doesn't like it. So you've really got to be watching that debt to equity on the stocks that you're buying at the moment, I think.
Yeah, good point. All right, Paul's email is next. You guys have mentioned that geopolitical conflicts and outside news are usually short-term market events and not the kind of thing that causes a major crash like the GFC. But why does the market have to follow historical trends? The stock market hasn't existed that long historically, so why couldn't we eventually see a completely different kind of crash that falls outside the patterns investors are used to? What gives investors confidence that markets will always recover the way they have in the past? Well, I'm probably going to tell you 2 world wars, a depression, and a whole bunch of other stuff. The market's been around for over 100 years and gone through, maybe not exactly in terms of what we're seeing today, but very, very similar and probably worse scenarios than today. We've had the dot-com crisis that the market got through, where the new shiny technology was the internet. How about you say something on this?
Yeah, I mean, if you go back and you think about it, right back to the 1920s, it's the same thing. We've gone back to the 1800s over and over again. The same scenario repeats. But it's, you know, it's about that tulip mania. So AI is the tulip mania of the current world at the moment. So eventually that's going to become overpriced and that will be downgraded. And the thing with the bond yields rising is it gives an automatic downgrade to a lot of these growth type stocks, and people lose money overnight and wonder what happened and why it doesn't come back up to where it was before. Yeah,
and I think it's important also, if you are looking to place money on the market, to understand, well, if I'm going to go for a scenario or an outcome, well, let me go back and see what is the most probable outcome. Now, if we go back throughout history, we have had very consistent boom and bust cycles. I mean, there's no arguing that over time. What this gentleman is proposing is that something completely new happens. And yeah, it could. But the probability, if you're going to put your hard-earned money on, for me, is to go with the high probability. That one black swan event that you're hoping for may never come, or may come once in 60, 70, 100 years. And guess what? You can still push the sell button whenever you want. You're not bound to stay in a market and to hold. This is the benefit that retail traders have. You're not trading billions of dollars. You don't need to be in if you know how to get out and ride trends. So I think it's something that is of less concerning when you're an individual investor or trader. But if you had, you know, a gun to my head and said choose one way or the other, I'm going to go on the thing that consistently happens over the last 200-300 years versus the one what if that may never happen.
I mean, it's a really good point that you're making. And I was thinking that, you know, the majority of the money is held by, and we've created this by those ETFs. We've actually put most of the control into the hands of the big institutions. It always was that, but it's even more so now. And so because that's the scenario, they will want them, eventually the market, you know, the big people, and this is not getting into conspiracy theory, it's what happens every cycle. They know it's coming. They want the flush out. They want the opportunities that come at the bottom. So, you know, that sort of answers itself, doesn't it?
Well, I was talking to Yahoo Finance the other day about that exact point. That one of the journalists asked, why is it that we're seeing, you know, huge rise in these mega cap stocks, even though maybe valuations are now becoming stretched and everyone's scared, but they're still rising? And he mentioned, you know, is it X, Y, or Z? But what he didn't mention was the ETF idea. And I said, well, you know, you've got to realise now with the popularity of ETFs, you look inside most of those products, and the popular ones, they all have the mega cap stocks. They all have the big stocks on the ASX. So you've got to think of all this money pouring into the same stocks with no rhyme or reason, just because people want the product of the ETF.
Yeah.
And that is, I think, what you're talking about. But let's move on now for our hot stock tip this week. Pedro, what have you got, mate?
The hot stock this week is Technology One, that's ticker code TNE, and they've recently come out with a result which their recurring revenue momentum is continuing, and the annual recurring revenue actually jumped 17% to 598 million, and profit before tax rose 9% The company also reaffirmed guidance, lifted its dividend 21%, and says AI and SaaS strategy is strengthening its long-term growth outlook, which is looking very promising. Now, interestingly, the stock has been sold off today, but I think that provides a little bit more opportunity rather than cause for concern. And this is why it's important to have a look at the chart. You may want to wait a little bit to see what happens with the price action before you jump into this one. Even though it's had stellar results coming out today, you might get a better opportunity coming soon. So I'll touch on the weekly chart soon, but first of all, let's have a look at what this stock has done over its lifetime. Ever since 2000, it has risen to the tune. Right now, it's sitting at around 4,500% up, which is a huge result. 7,000 it was up at one stage. So it's done pretty well for itself. What has the trend done? Well, it's typically trended around this area here, and then the trend accelerated a little bit more, and then it accelerated even more. So it was getting unsustainable, and I could even draw another momentum there, but really it came back down to this level of momentum that I've drawn here on the third line. It could come back down. That's a risk that does come back down to around that $25 to $26, touches on that momentum and then keeps going, or it could actually come back down to this other momentum to have a little bit more sustained, and that would coincide with a more sustainable type of growth for TNE. But on the weekly chart is where it gets interesting for me, because it's doing a pattern that it has done similarly in the past, and that was back here in December 2024, where it has these types of sideways price actions and then has that final blowout out of the pattern. And you can see that it does have a history of doing that. It has these consolidations and then shoots out of them. It has become more volatile in recent years. Since 2024, it has had those price actions where it's more sharp to the upside, including to the downside. Now, you might be thinking, well, there's an interesting pattern that's unfolding, and I won't outline the pattern, but I'll outline the fact that the momentum is looking, a little bit sluggish there to the downside. That we've got a lower trough here back in 2026. So there is that possibility that it does break to the downside. And then if it does break below that previous low of February 2026, then I think it's pretty much, game over for a while, at least until it can pick up again. But at the same time, it could actually just do something similar, like I said, to what it did back here. And I've just put the wrong tool there. I'll outline this there. It could be doing something similar to there, where we see the stock eventually break to the upside, and we can see that it is trending down. This is today's price action. I'll go just touch on the daily here. It's a pretty big outside bar moving price to the downside. We've got increased volume, but if it holds above that $26, I think that it could still present a good opportunity. But keep your eye on this one, because it could be a classical case of getting sold on news just because it's got positive news, bit of profit taking, and then eventually we do see that continuation of trend.